Okay, so into the international business, uh, we have dealt with the EXIM activities, how exactly the export activities and import activities are going to get involved. And today we are discussing about EXIM policy. Yes, in the initial stage, EXIM policy, which has been introduced in the year 1962, and once in 5 years, once the Planning Commission is going to get revised, they are going to introduce their own EXIM policies. Okay, so those amount of revisions, even amendments, everything are going to get associated. And recently, EXIM policy, which has been introduced in the year 2015. Let us look forward into the amount of legal framework into the EXIM policy. Yes, basically, it consists of preamble. Yeah, preamble in the sense introduction. You can also call that as a definition. So EXIM is associated with the globalization policy into the LPG policy, what we were discussing, liberalization, privatization, and globalization. So here EXIM is relating to globalization policy. So into this particular priority, is once in 5 years, once the planning commission is going to get revised, they are trying to give their own amount of definitions based upon a current scenario. So preamble, that definition also has been modified since many years. Okay, and even a recent definition of 2015, in case if you want to move forward, yes, the number of countries have been changed, even with respect to the amount of our transactions have been changed. Maybe we people are exceeding the level of export and import activities, even intraport activities, to the larger extent. Okay, so second point is about duration. Yes, I just now I have discussed with you people the duration of any of the EXIM policy is 5 years. Okay, so once the new planning commission is going to get joined, obviously they are going to make a certain amount of changes into their routine. And the definition of amendment means changes. The change is the constant thing across the globe. What we were discussing. Yes, it is true. Amendments is going to be almost such like whatever the government is going to make their own consideration with different countries, or however they are going to look forward into the betterment of the EXIM activities based upon the profitability, one thing. Second thing is about a competitive advantage. Okay, so based upon these two things, a contract between two different countries are going to get happen. Basically, with our country, one more country is going to make their own kind of the contract. So all those things have to get involved in the amendments. Amendments means changes. Okay, and the transitional amendments. Sir, what exactly this transitional amendments are all about? See, basically, whatever the amendments they are going to make, basically all those amendments have to be under transit in the sense transactions. Okay, so transactional agreements, whatever which is available at present, that thing only will be reflected in EXIM policy. Sorry, you mean to say as like those contract over agreements are going to be deleted? Yes, truly speaking, the agreements where the contract period is got over between the countries, that's going to be deleted, and transitional agreements only will be getting reflected in EXIM policy. Now you got the clarity over what exactly transitional agreements are. Okay, and the next thing is about free export import. Yes, so currently whatever the European agreement they have made, maybe you people have heard about European Union. Okay, so they do have this free export and import across all the countries of European continent completely. Okay, so except European Union, known other countries, they have taken initiative. Okay, but still, even till today, is this kind of free export import activities are there between India, Nepal, India, Bangladesh, India, Sri Lanka. Okay, because India is acting as like a developed country compared to those countries. Okay, so they are depending upon India for certain amount of commodities, and they are expecting these amount of services to be available at the cost of free. Now you are understanding the reality here. Okay, so it is not mandatory as such, like we need to have a free export and import activities between all the countries. Okay, so wherever we do have a contract, we have to mention it very clearly what exactly the tax you are going to fix it up. That is to be called as tariff. Okay, so even quantitative restrictions will be fixed. That is to be called quotas. Correct. So the tariff and quotas, in case if it is nil, there is no restrictions, then it is to be called as a free export and import activities. You got the point clearly. Okay, and it is not necessary as such like all the commodities are going to come into that particular control. No, it is not necessary as like that. Maybe certain amount of essential commodities which is required to that particular country, as an extension of helping hand, the home country, maybe I can call India, is going to take these kind of decisions. Correct. So objectives are associated here. First thing is about to accelerate the economy. Yes, so when you are going to make these kind of contracts, when that's going to get reflect over EXIM policy, absolutely the economic activities are going to get accelerate. It is going to get booster. That as much it is required to that particular level of exporting activities. Okay, that's how it's going to be the major advantage, and that's the main objective which is being kept. Second thing is about to motivate the sustained economic growth. So what exactly this is sustained economic growth in the sense? Yeah, basically we need to balance both home country as well as host country requirements. So we should not go for making priorities while making a sales activities. Okay, maybe by compromising your home country requirements in case if you're going to supply more for the purpose of foreign exchange earning into the export activities, then that's a wrong. Okay, so here sustained economic growth is the most important priority. Both home and host countries supposed to get satisfied. Okay, so productivity should get enhanced. That is the internal link associated with this particular point. Even with respect to that technological strength, very much sure. When you are trying to look forward into betterment of the activities, maybe depending upon human resources is one thing. Second thing is that how better I can go for increasing my production level into the volume of production. That your thought process is going to get begin. Okay, so technological strength, efficiency is going to get emerge with the help of this EXIM policy. Okay, it is going to be acting as like feeding a certain amount of solution. Maybe sugar will be offered to this nerve system so that a proper amount of blood circulation is going to take place. Correct. So this is one of the injecting activity of betterment activities into the economy. That is how the strength of the economy, efficiency of the companies is going to get boosted. So the last objective is to provide quality products and services. Yes, most of the time this particular consideration is acting as like a concern in many of the countries. So A grade quality products are getting exported, whereas B and C grade quality products are getting circulated in our economy. No, that is against to the rules. Okay, so quality products and services need to be served even into your home country. Okay, that is the most priority of EXIM policy when they are going to announce certain things, when they are going to make agreements between the countries. Okay, so the next thing we need to discuss about balance of payment. So into the balance of payment is all the amount of monetary transactions which are going to takes place between two different countries. and rest of the world, everything will be recorded in accounting transactions. Okay, so as like a double entry system, what you people have dealt in the initial stage of first semester. Okay, debit and credit columns, two columns will be there, and probably that buyer and seller, you're going to call that a debit and credit, correct? So you are going to maintain that both balance should be get equal. That's the thing what I'm discussing here. Okay, so where this double entry system is available between the countries here. Okay, so they are going to handle with three different items. One thing is about visible, second is invisible, and third thing is capital. So what exactly this visible items are? So basically, whatever the physical products we are going to sell it off between the countries, everything can be considered as a visible items. Okay, nothing exceeded here. And invisible items, all the services sector comes into the category of invisible items. Maybe I can go for naming it as such like ITES services. Okay, so maybe you're going to handle with taxation, accounting with other country client. Okay, so all those things are going to be considered under invisible. Okay, so you are working for a company name to be called E&Y, Capgemini, whatever name it is. So, okay, when you are going to handle some other country client, obviously that particular fees will be collected from the client in his home country. In the sense, for your host country will be collecting that particular fees, correct? So in that particular thing where EXIM activities are going to get involved. Okay, invisible items, all the pure services sector, medical services, hospital services, maybe into the hospitality services, tourism, traveling, even ITES jobs, everything comes into the category of invisible items. Okay, and the third thing is about capital transfers. This is also named to be called FDI, foreign direct investment. Okay, so into this particular scenario, people they are going to get involved into capital transfers where they are going to get associate in terms of investing into other country for the purpose of development. One thing. Second thing is getting a good amount of profit compared to their home country. Okay, so maybe I can go for naming it as such like US is one of the country where in case if you would like to invest over there in banking sector with a fixed deposit or else in the name of recurring deposit, maximum 3% of interest you're going to get enjoy over that. At the same amount of time, if you would like to invest into the countries such like India, correct? So where return on investment will be minimum around 23% to 25% in case if it is the least profit enjoyable product or else project. If it is going to be at the higher, then higher level of interest can be able to get generated with the help of FDI investment into other countries. Correct? That's going to be most advantageous thing when people they are going to take their courage towards capital transfer. That's the most advantageous aspect. Okay, and there are certain components of balance of payment. Yes, first thing is about current account balance. So what exactly this current account balance is all about? Yes, now I'm going to come to this particular reality as like what we are going to do this ITES services. Okay, even other countries they will be doing their IT services also some amount of time. Maybe I can go for naming it as such like your company is there, Indian company is there, where they are expecting the services should be availed for their operating system from Windows. That's assumption what I'm dealing with here. Okay, so then Windows is from US. Okay, so they are going to give a complete amount of software services for your company, and at the same amount of time some other customer from the same US is expecting accounting transactions, accounts receivables, accounts payables, taxation management, financial management, correct? those amount of services he is getting from your end. So between the country, what exactly the amount is being exchanged is going to get calculated. Then it's to be called as current account balance, in a simple way of understanding to you people. Okay, so all the transactions, whatever it is going to get occur, concerned with the visible items and invisible items with respect to products. Okay, everything will be consolidated, taken into this particular point of view, and they are going to calculate into current account balance. For that day, things are going to get clear. Okay, every end of the day, this current account balance particular activity is going to get calculated. Okay, second thing, capital account balance. Sir, it is not going to get complete within a day. Okay, is it going to get complete at least very next day? Is it going to get complete within a week period of the time? No, sir, it is exceeding. Then it comes under capital account balance. Okay, so this capital account balance is going to get calculated once in a year. So all your foreign direct investment, maybe a certain amount of time, maybe you're going to buy any of the vehicles which is quite costlier and which is going to be produced by some other, maybe I can go for naming it a BMW, is one of the product which is not getting manufactured from India, correct? So where all the amount of revenue which will be collected by that particular country who is selling this, correct? So whether all these transactions are going to get clear within a day or else within a week period of the time, no, all these calculations are going to take place once in 365 days. Okay, so all those capital account balance are also the second component. Then about overall BOP. So what exactly this overall balance of payment calculation? Yeah, so basically overall BOP is going to be calculated based upon this current account as well as capital account, and even FDI and other any kind of subsidies which is being offered by some other countries, as well as any of the loans and advances being given by World Bank or else any of the country to another country. Everything will be calculated and counted, and they are going to start taking up whether they are in the surplus or else deficit. Okay, so in case if that particular country, assume that India is making this kind of balance of payment calculation against US. So basically last year India has faced a certain amount of deficit. That's the reason dollar's price from 64 rupees, India has compromised, and that has been boosted up to 67 rupees because of lack of balance of payment. Okay, so you can also consider this as a deficit balance of payment. Okay, so why that base value of US dollar has been jumped so quickly? This is the reason. Okay, on a day-to-day basis also that US dollar against Indian currency is going to get fluctuate. Why? Current account balance we are going to calculate every day, correct? So this is how the things are going to get changed. That's the most important reason. Everyone they're going to wait for that accounting period get over, in the sense 31st March. Yes, that is the highest quotation mark. Everyone they're going to wait so far for overall balance of payment between two different countries. Okay, yeah. So thank you.